So imagine you're out in the middle of a Pacific cyclone. You've got a 200,000-ton cargo vessel, and it's carrying, $500 million in commercial goods.
Oh, wow. Yeah, that's a massive payload.
Right, and suddenly it loses propulsion. The steel hull is just groaning under 50-foot swells. You've got shipping containers literally snapping off the deck, vanishing into the ocean.
Sounds like an action movie.
Exactly. The crew is frantically trying to restore power. The captain is coordinating this massive emergency response. It's a complete logistical and physical nightmare.
An absolute disaster.
But, and this is the wild part, in the high-stakes world of maritime insurance, that catastrophic event, that's just the opening paragraph of a very long, very intense legal saga. So welcome to the deep dive.
Yeah, it's the exact moment where that theoretical safety net of your insurance policy gets slammed by reality. And we're taking a really fascinating route to explore this today. We're looking at this whole process through a framework from our source material, the Diary of a Lawyer Notes.
Yes, and I found this source material just incredibly compelling because, it strips away that assumption that maritime insurance is just like dry paperwork being shuffled around a desk.
Right. People think it's just bean counters.
Totally. But it frames the anatomy of a maritime claim as this huge high-stakes journey. The source uses this concept of a claim file, and they frame it as a literal diary kept by maritime lawyers.
Yeah, a diary of the disaster.
Exactly, meticulously documenting everything from that first frantic distress signal all the way to, like, a multi-million-dollar settlement, or sometimes a really brutal legal battle. So our mission today is to map out that exact anatomy.
And really, the timeline of that diary dictates everything. I mean, the transition from a routine voyage to an absolute crisis that sets this massive legal machine into motion. The storm hits, the ship gets damaged, and instantly a clock starts ticking.
Which brings us to the first page of that diary, right? The very first literal step the shipping company has to take. In the source, they call this claim lodgement.
Yes, a claim lodgement.
So if your vessel is actively taking on water or your cargo is getting ruined, you have to contact the insurer with the who, what, when, where, and, the estimated loss.
The basics, yeah.
But reading through the notes, it's pretty clear this is way more than just a quick courtesy call to an emergency hotline.
Oh, definitely not, no.
Yeah.
That initial phone call or email instantly triggers a really strict, binding legal framework.
Really? Just the notification?
Yep. The second those details are sent over, that claim file is officially open. And the legal posture of everyone, the shipping company, the insurance syndicate, it fundamentally shifts. They are now operating under the very strict rules of maritime insurance law.
Okay, and I was so struck by how heavy those rules are for the person who just lost their ship. Like, you might assume you just lodge the claim, throw your hands up, and, I don't know, let the insurer handle the financial mess.
Just sit back and wait for the check.
Yeah, exactly. But the source outlines two massive legal duties that immediately fall onto the shipping company from day one. And the first one is the duty of disclosure.
Which is huge.
It is. The legal standard essentially demands radical transparency.
Radical is the perfect word for it, actually. Because the insured party, they are legally bound to share all material facts about the incident. And the really tricky part here is they have to hand over this information even if it completely jeopardizes their own claim.
Wait, really? Even if it makes them look bad?
Oh, absolutely. They cannot filter the data to make themselves look better. The law demands utmost good faith.
Wow. The psychological pressure of that must be just insane. I mean, you have these executives and captains who might realize, like right after the disaster, oh man, we missed a crucial weather warning.
Or maybe a pump wasn't calibrated properly before they left port.
Right. And your natural instinct would be to just downplay that, right? To protect your $50 million payout.
Of course. Human nature.
But the notes make it explicitly clear that hiding even minor details can lead to a total denial. Like, the insurer can just void the coverage entirely.
Yeah, it forces the shipping company to be completely vulnerable. If the insurer discovers later, say during an audit, that a fact was concealed, even unintentionally sometimes, the policy's just compromised. Done.
So that's the first duty. But the second one, the mitigation of loss, is also wild. You can't just abandon a sinking ship or wet cargo just because you know it's insured.
No, you definitely cannot. You have to take proactive, reasonable steps to minimize the financial hit.
So you have to actively try to save the ruined cargo or call for emergency towing, pump out the water.
Yeah, and the standard they apply here is really interesting. The legal system expects you to act as a prudent uninsured.
A prudent uninsured. I like that phrase.
Right, meaning you have to fight to protect your property with the exact same urgency you would if you were paying for all the damages completely out of pocket.
So you can't just be lazy because the insurance company is footing the bill.
Exactly. You can't let the asset degrade just because someone else is paying for it. You have to hustle.
That sets such a high bar. I mean, the system demands this uncompromising honesty that could hurt your wallet. Plus, you have to physically exhaust yourself to save property you've probably already written off in your head.
It's a lot to ask of a crew in the middle of a crisis.
It is. But thinking about it, relying on the shipping company to just self-report all this honesty that feels like a huge structural problem. I mean, when millions of dollars are on the line, the insurer can't just blindly take their word for it, right?
No, they certainly don't, which transitions us perfectly into the investigation phase.
Mhm.
Because if the system demands radical transparency, the insurer has to have a really rigorous way to fact-check it.
Enter the claims adjuster.
Enter the claims adjuster, yeah.
Yeah.
The insurer dispatches these folks,
Yeah.
and it might be an internal team or a third-party independent expert, but their mandate is to be the forensic investigators of the incident.
Okay, so they aren't just like bean counters looking at the price of wet cargo. They are actually playing detective.
They're totally playing detective. They have to verify that the reality in the water actually matches the very first entries made in that claim file diary. And they're guided strictly by the Insurance Act and the specific policy terms.
And the notes break this down into three primary pillars of investigation, right? The first one is coverage.
Yep, coverage is step one.
So they're verifying if the policy actually covers the specific type of incident. I imagine this is where they bust out the magnifying glass for the contract wording.
Oh, wording is everything here. Shipping companies buy highly specific coverage. So they might have coverage for hull damage, but maybe not for the exact type of hazardous cargo they were hauling that day.
Oh, interesting.
Or maybe there's a geographic warranty. Like, the policy says they won't sail through specific high-risk piracy zones.
And if they do?
The adjuster's first job is to confirm, hey, does this event even fall within the boundaries of what you bought? If not, the investigation stops there.
Wow. Okay, but if it does, they move to the second pillar, which is causation. And this seems to be where the real forensic work happens.
Definitely.
The adjuster has to prove the damage was directly caused by a covered peril. And the source mentions things like storms, collisions, piracy. But proving causation mid-ocean, that's got to be tough. You can't just look at a wet ship and know what happened.
No, you have to unravel what's called the proximate cause. So let's say a ship sinks in a violent storm. Now, storm is a peril of the sea, which is generally covered.
Right.
But the adjuster needs to know, was the storm the actual cause? So they'll pull the logbooks, they'll talk to meteorologists to match the ship's coordinates with satellite weather data.
Oh, wow. They go that deep.
Oh, yeah. They'll hire metallurgists to look at the fracture patterns on the steel because they need to know, did it sink because the storm was just unprecedented, or did it sink because the hull was already cracked from some unreported incident 3 months ago?
Right. They're basically trying to build an airtight timeline.
Exactly. Proving or disproving the chain of events.
And then the third pillar is the extent of loss. So once they confirm coverage and causation, they have to figure out exactly how much money is legally recoverable.
Yeah, pricing out the salvage, the ruined goods, the dry dock repair quotes.
And I guess factoring in the mitigation efforts we talked about earlier.
Yes, that's crucial. If the adjuster finds out the captain could have saved half the cargo just by closing one specific bulkhead door, but didn't.
Ooh.
Yeah, the recoverable loss payout might drop significantly. They quantify the disaster into a firm dollar amount based strictly on the rules.
But I mean, let's be real. Detectives usually find clues that complicate the case. Facts rarely fit perfectly into neat little policy clauses. So what happens when the adjuster finds a gray area, like a discrepancy between the story and the evidence?
Well, that's when things get really interesting. According to the Diary of a Lawyer notes, this is the pivot point where the maritime lawyers formally enter the chat.
The legal review phase.
Yes, the lawyers for the insurance syndicate will just pour over this ever-expanding claim file. The adjuster's reports, thousands of emails, maintenance invoices, all of it.
And they are hunting for coverage defenses, right?
Exactly.
It kind of reminds me of, like, trying to claim a car accident on your auto insurance, but the mechanic points out that your brakes haven't been checked in 10 years.
That's a perfect analogy.
Right.
And the source actually gives a brilliant example of this. using a ship's engine.
Oh, right. Walk us through that one.
Okay, so imagine a massive ship gets caught in a severe storm, the main engine dies, and the vessel takes on catastrophic damage. The shipping company lodges the claim, saying, hey, the storm caused this, peril of the sea.
Seems straightforward.
Right. But then the maritime lawyers dig into the diary. They look at the maintenance records, and they discover the main engine was actually overdue for a mandatory inspection.
Oh, no. So they missed a scheduled overhaul.
Yep. So the shipping company is crying storm damage. But the insurer's lawyers hit back with a defense known as unseaworthiness.
Unseaworthy.
It is a devastating defense. The insurer says, yes, we cover storm damage, but there is an implied warranty in our contract that you will send a seaworthy vessel out there.
Right. If you send out a broken ship.
Exactly. If the lawyers can prove the ship was doomed before it even left port because of bad maintenance, they argue the proximate cause wasn't the storm at all. It was negligence.
Wow. So it transforms from a simple storm claim into this crazy technical battle over engineering standards and preventative maintenance.
Completely.
Yeah.
They might also claim delayed notice, like maybe the crew waited too long to report the engine trouble, so the insurer couldn't send their own engineers to fix it in time.
It really just underscores why that diary is so important. Like, one missing invoice from 3 months ago can be the reason a $50 million claim is totally denied.
It absolutely can.
Now, the notes also mention another major twist the lawyers look for: subrogation.
Yes, subrogation.
Which is basically when the investigation reveals that a third party is actually the one who caused the disaster.
Right, and that adds a whole new dimension to the legal strategy. So let's say another vessel recklessly crashes into your ship.
Okay.
Your insurer will still process your claim and pay you, because that's what the policy is for. But through subrogation, the insurer essentially steps into your shoes.
Okay, meaning what exactly?
It means they acquire your legal right to go after that at-fault third party to get back the money they just paid you.
So they make you whole, but then they inherit your beef with the other guy.
Exactly. They inherit the grievance.
But wait, executing that in international waters sounds impossible. I mean, foreign flags, complex jurisdictions. You can't just mail a collection letter to a ship halfway across the globe.
No, you definitely can't. It's an incredibly aggressive, high-stakes game of international chess. The maritime lawyers literally track the at-fault vessel.
Track it, like physically.
Yes. They monitor its movements, waiting for it to pull into a jurisdiction where they can legally enforce a maritime loan.
Oh, wow.
So when that third-party ship pulls into port in, say, Rotterdam or Singapore, the lawyers will orchestrate its arrest.
They arrest the ship.
They legally hold the vessel hostage until the third party's insurers agree to pay the subrogated claim.
That is wild. Okay, so we've got the disaster, the duties of disclosure, the forensic adjusters, the lawyers hunting for defenses and arresting ships. So how does this actually end? We're heading into the final act of the diary here.
Right. Well, it usually starts with settlement discussions. If the adjuster's findings are clean and there's no unseaworthiness or anything, the insurer just calculates the payout, makes an offer, the shipping company accepts, and the money wires over.
Nice and easy. But given the millions at stake and all these lawyers looking for loopholes, they must inevitably just completely disagree sometimes.
Oh, constantly. The shipping company wants $50 million for the storm. The insurer offers 10, citing the bad engine maintenance. When they hit that absolute impasse, it escalates.
And where does it escalate to?
They might try mediation first, get a neutral third party, or a traditional commercial court. But the heavy hitter of this industry, according to the source, is arbitration, specifically under London maritime law conventions.
Arbitration in London. Why London? Why is that the ultimate arena for this?
Well, London just has centuries of history as the epicenter of global maritime trade. So the frameworks there, like the London Maritime Arbitrators Association, they offer this highly specialized neutral ground.
Okay, so it's tradition, but also expertise.
Exactly. The arbitrators aren't just regular judges who might not know ships. They're often former captains, naval architects, veteran maritime lawyers. They intimately understand the technical nuances.
So it's a tribunal of peers, really.
Yes. But the process itself is very unique. You'd think it's like a TV courtroom drama with lots of oral testimony and
That's me
theatrics.
pounding on the desk.
Right. But it's actually rigorously paper-based. The arbitrators dissect the documentary history, which brings us all the way back to the main theme of the notes.
The claim file, the diary.
The diary. Exactly. When you're sitting in an arbitration room 2 years after that ship lost its engine, the decisive factor is the integrity of that claim file.
So they're looking at that very first phone call.
Yes, they scrutinize the lodgement, the metallurgical reports, the logbooks, showing exactly what the captain did hour by hour to save the cargo.
And if the shipping company says, oh, we tried to pump the water out, but there's no written record of those orders in the log.
The arbitrators will likely side with the insurer. In arbitration, if it isn't meticulously documented in the file, it basically never happened. The whole $50 million case hinges on the discipline shown on day one of the crisis.
It's amazing. The party with the best diary wins.
Usually, yes.
This whole exploration really demystifies the industry. And to kind of distill all of this down for you listening, the source material explicitly highlights 3 ultimate takeaways, like the 3 lifelines of claims handling.
Yeah, these are the mandates if you're navigating a disaster.
Exactly. And the first one is timeliness.
You have to report promptly. If you delay that initial lodgement, you deprive the insurer of the chance to send adjusters out before the scene degrades. Late notice can just be completely fatal to a claim.
Right. The second lifeline is transparency, and this goes back to that duty of disclosure.
Right, you have to provide every material fact, even if it makes your own operations look bad. Because if you conceal anything, it unravels the whole legal foundation of the policy.
And the third and final lifeline is documentation. Keep every single record, communications, repair quotes, everything. Because that is your only armor if things escalate to arbitration.
Timeliness, transparency, documentation.
Perfect summary. You know, reviewing all these notes from the Diary of a Lawyer leaves me with a pretty provocative final thought.
Oh, what's that?
Well, when we talk about international law and London arbitration and arresting ships, it feels like this impenetrable fortress of corporate money and jargon, right? Very
Yeah.
transactional.
Sure, very cold.
But when you actually look at the mechanics, the radical transparency, the duty to act as a prudent, uninsured, relying on a truthful diary, you realize something surprising.
Yeah.
At its core, this multi-billion-dollar ecosystem is built almost entirely on the expectation of human honesty.
That's a really great point.
It requires people to tell the unvarnished truth when millions of dollars are on the line, and it is the hardest thing to do. Without that baseline of trust, the whole apparatus of global trade would just collapse under endless litigation. Behind all the legal clauses, it's just a human decision about integrity.
It really is. It comes down to people.
It absolutely does. Well, this has been an illuminating journey through the maritime world. But before we close the file on today's deep dive, I am required to share a specific mandate regarding our source material. Please note, the Diary of a Lawyer and all its content published is strictly for educational and informational purposes only. Nothing presented here constitutes legal, medical, or mental health advice, nor does it create an attorney-client relationship.